Welcome to Manager EDU. Today I will teach you the price-earning ratio, which is also called the PE ratio. I will define the ratio, teach you the formula, and explain the concept of what the value of the price-earning ratio means. So let's get started. The price-earning ratio is a valuation metric that compares a company's current stock price to its earnings per share. When a company is listed on a stock market, we compare its market price per share with its profit per share to see how the stock is valued. If the PE ratio is higher, it is generally not considered a good sign for value investors because it means the stock is expensive relative to its earnings. If it is lower, it is often considered a good sign, as it may indicate the stock is undervalued or cheaper relative to its earnings. Let's learn its formula. Price-earning ratio equals price per share divided by earnings per share. And earnings per share, or EPS, is calculated as EPS equals net income minus preferred dividends divided by weighted average shares outstanding. Let's take an example. Suppose we have a company named ABC that is listed on a stock market. We want to compare its market price per share with its profit per share. The market price per share is $50. Earnings per share is $5. So we apply the formula. Price per share, $50, divided by earnings per share, $5, equals 10. Therefore, the price-earning ratio in this example is 10. Now let's learn the concept behind the ratio and what this value means. A PE ratio of 10 means that an investor needs to invest $10 to earn $1 of net profit from the company. In other words, the stock price is 10 times the company's annual earnings per share. For a businessman or investor, a lower PE ratio is generally attractive because it means they can earn $1 of profit with a lower investment. A higher PE ratio means they need to invest more money to earn the same $1 of net profit. So, when the PE ratio is lower, it is often seen as a good sign for investors because the company's stock is cheaper relative to its earnings. This can encourage more people to invest in the company. That was all about the price-earning ratio. If you didn't fully understand, you can watch this video again. Thanks for watching.